Hi everyone, Jonathan Whitaker here, Head of Distributions at TBI Investment Managers. Here today to talk to you about our Section 12J offering, Ora Capital. Now some of you may already be aware of Section 12J, but this is a question I have gotten from time to time, so I'll address it up front. Is this a loophole or scheme to evade tax? And the short answer is no. Section 12J is a tax incentive that was introduced back in 2009, and it's designed to encourage investment in local SMEs so as to boost economic growth and job creation. You would invest in an approved Section 12J company such as Ora Capital, and this would entitle you to deduct that investment amount against your taxable income in the tax year that investment is made. The 12J company then takes the capital raised and deploys that into its mandated strategy with the aim of generating capital growth or dividends or a combination of the two for its investors. You as the investor then also retain that upfront tax deduction that you claimed, as long as you remain invested in the 12J company for at least 5 years. And whilst there is a chance that this tax incentive may be extended, currently the opportunity to take advantage of it is running until 30 June 2021, which falls under the sunset clause. So who are suitable 12J investors? These would be tax-paying individuals, trusts, and corporates with an investment horizon of at least 5 years. There would be investors who may want to reduce their income tax liability or shield against a recent capital gains tax event. Maybe someone who's looking to complement their conventional RA contributions. And it's a great way to diversify into assets with a low correlation to the traditional listed markets, being listed equities and bonds, with the ultimate goal of unlocking new avenues to boost portfolio return. You may be interested to invest in the 12J, so what should you consider? Firstly, what's the investment mandate of the 12J and what's the associated level of risk with that strategy? What is the exit strategy and how do you realize your investment in the future? What's the caliber of the management team? And is there already an established portfolio and investment pipeline? And what are the fees that are charged? Now, in answering these questions, I'm going to take a closer look at Ora Capital, which is our approved 12J company, with an investment strategy that looks at operating rental businesses. I'm going to get into a bit more detail now on why we prefer the strategy, but in a nutshell, we will partner with operating rental businesses and provide the equity funding to purchase specialized assets. These are then leased onto corporate clients, the good credit standing. This then ultimately generates predictable revenue, which ultimately passes back to the investor as quarterly dividends. So the management team within Ora Capital has extensive experience in managing private equity, tax and investment structuring. This is a unique blend of experience which lends itself well to a 12J company, which is effectively tax managed private equity. And then the team is also very well supported by the team at TBI Investment Managers. So why do we prefer our strategy? Firstly, it's conservative. It's a lower risk profile than conventional private equity. The investments made are asset backed, and these assets are leased to counterparties with a good credit standing. It's also scalable. It's a very simple structure, and with our ability to deploy the cash on volume, it means that we can do it more quickly than complex private equity or real estate deals, thus minimizing cash drag. It also offers diversification. Operating rentals is present in most sectors, and we can build a diversified portfolio of operating rental businesses. But on a look-through basis, it's also a very diversified rental book of counterparties that are in different sectors of the economy. It's also dividend generative. The underlying rental deals do produce predictable revenue streams, which pass through to the investor as quarterly dividends. This means that you don't have to wait long to start realizing a return on your investment. And then finally, it allows for an efficient exit. The term structure of these transactions, ranging anywhere from 3 to 7 years, mean that we can stagger the maturities over time to fall in line with the future liquidity needs of our investors. At this point, you may be wondering, how has COVID-19 impacted our business? I think it's fair to say that no particular business has gone unscathed from this. But despite the tough trading conditions, our investee companies have proved their resilience. The portfolio has been well diversified, with some of the underlying counterparties being in sectors that were able to operate during the national lockdown, resulting in a lower than expected disruption to our rental collection. This means that we were able to still provide our investors with a degree of capital price stability and continue our commitment to paying the investors that quarterly dividend. Earlier this year, we also concluded our capital raise, so we are sitting on significant cash. And with SMEs struggling to unlock sufficient bank funding, it does put us in the position to take advantage of attractive investment opportunities going forward. So what's the opportunity for you as an investor now looking at Ora Capital? For a minimum investment of 100,000 Rand during the prospectus period, which is now opening from 1 December and will run through until 28th of February, you will gain access to Ora Capital. Maximum investment, maximum allowable deduction in terms of individuals and trusts is 2.5 million, and the maximum allowable deduction for corporates is 5 million. The fees charged are fairly standard. It's a 2% management fee on the invested funds, but quite crucially, we only charge 0.5% on the cash portion of the portfolio. So there's an alignment of interest here with the investors to deploy cash as quickly as is practically possible. Industry standard around performance fees is generally 20%. We've gone the more conservative route of only charging 10% performance fee. In terms of the targeted return, we are targeting an annualized CPI plus 15% per annum over a rolling 5-year period. For purposes of illustration, we assume a wealthy individual invests R1 million and claims their upfront tax deduction. Over that period, they then earn dividends, less dividends tax, and ultimately they realize the investment at the end of the term. For simplicity, we assume that it is the same as the money that was initially invested. There is capital gains tax applicable here at a base cost of 0. And when you calculate the total net after tax cash flows and what it equates to in terms of an annualized return for the investor, we get to that net after tax return of 21% per annum, which I think you can agree is a very attractive return target. When you invest, you gain access to the current portfolio, which includes Thunderbolt, Seam, Broadreach, and Kuna Coffee. These are businesses that operate in the printing, hospitality, security, renewable energy, and coffee sectors, so you get very good diversification. You will then also gain access to the investment pipeline. As mentioned, we do have cash available at the moment, but we will soon be drawing down on all of that for various investment opportunities, and we will be required to raise more cash for more opportunities down the line. So if you would like to invest, the process is fairly simple. You will complete the application form at the back of the prospectus and send that through along with your FICA. Once approved, you would then send them through the proof of payment, and then you'd be issued with 2 documents. These would be the investor statement confirming your issue of Ora Capital shares, and then the tax certificate which you would use to substantiate your claim for deduction. I hope you have found this video interesting. If you would like to find out more about Ora Capital or to invest, you're welcome to reach out to us. We look forward to hearing from you, and stay safe.